Here are 3 reasons why to subscribe to Fringe Financials on YouTube. Number 1, it is free, which is the best price that you can pay for this kind of content. 2, I am completely transparent with all of my investments. And number 3, I have a variety of educational videos every single week. Now let's get on with the video. What is up, everybody? It is Fringe Financials here, and welcome back to another video. And in today's video, I will be telling you how I just recently acquired 100 shares of Tesla stock. Is it a good decision? Is it a bad decision? We're not really quite sure. Again, only the market will tell as time goes on here. So I'm going to be walking through how this happened in today's video and my thoughts and ideas about how the week went in the stock market. If you're excited for today's video, make sure that you smash the thumbs up button, subscribe to the channel if you've not already done so, and make sure to turn on the bell notifications so you do not miss out on any future videos. So, as you will see on my screen here, so this is the Tesla stock. And this is Monday morning. So last Monday, I opened up a position. I basically sold a contract on Tesla stock. Basically what that means, let me just zoom out here a little bit so you can kind of see what I'm talking about. Basically what that means for this contract here is that I made the bet around here. I'm not really quite sure exactly where it was. I think it was like right at the bottom here. So I made the bet that Tesla stock would not go below $257.50, which I marked down this thick red line down here. So what happens is that I'm making the bet against a buyer and saying it won't go below this red line here. And if it does, I'll buy 100 shares. But if it doesn't, you get nothing and I keep $213. Remember, my new options trading strategy is that wheel strategy I made a video on earlier on about 2 weeks ago, I believe. And the idea is to do passive income, is to collect premiums from buyers over and over and over again to grow my passive income and then to use that income to buy shares and everything else. So my bet here Monday morning was that Tesla stock would not go below $257.50. So I bought about like down here, I believe. And again, the idea behind it is that you can see it kind of bounces up and down here multiple times, and it kind of rejects at this level right here, about 264.90. So I bought on the second bounce down, saw it recover, and I was like, great, I can be able to buy that one, take my premium of $213. And if you do the math, $213 a week, if I did that consistently for the whole year, I'd be making about $10,000 in options trading. Now, again, that's not realistic as much, but it's just something to keep in mind about that. Like, my goal is now to shoot for maybe, that $200 premium per week to kind of give me that passive income, which again helps me outperform the S&P 500. And up to this point, if you've been watching my Instagram and looking at my stories, feel free, if you have not, to make sure you follow my Instagram down below. But again, with my Instagram channel, I have been recently outperforming the S&P by like quite a bit, which has been absolutely fantastic for my options trading. So Tesla stock, again, buy the contract down here, comes back up, bounces around, nothing happens for the day. And I closed day one out on Monday, closes at about, let me see what it's going to close at, about 265. Again, this is, I'm not zooming in on this one, but it's about 265, feeling great. And again, the point of me selling these contracts here is to let time be on my side and not against me. So as more and more time goes by, as this stock price doesn't get to this value here, I get more and more money of my premium collected. So the longer it doesn't get to that value, as long as it doesn't go closer to this one, that's when I get more and more value. And again, I want time on my side, not against me, because again, these contracts have expiration dates. Like this one, for example, was to expire on Friday of this week. So I only had 5 days for this contract to expire worthless. And then again, I would keep my premium and I would just do it again next week. So day one feels pretty good. Again, not looking like, again, it looks like it has support at 264.9, which is great. And not much happening in the after hours and the pre-market. So moving on to Tuesday, get a big volume here at the very beginning and then a big sell as well. So usually what happens is there's a lot of volatility at the beginning time of the market when it opens at 9:30. From about 9:30 to about 10:30, there's a lot of volatility that happens where it goes up a lot, then comes down a lot. What usually happens is people buy up a lot, baby, and they say, oh, I just made a lot of money. I'm going to sell off now and take my profits. Or vice versa. Maybe it comes down first and people say, oh my God, these are great buying opportunities, and they buy back up. So you'll see a lot of volatility at the openings of the markets. Example, same thing over here. A lot of people sold off, and then people were like, oh, discount, buy up, and then sold off, and then buy up again. So that's why I'm saying like there's a lot of support here because people saw this as like a bargain price for a lot of people. But anyways, so again, market comes along, drops down a little bit here to 261, still $5 above, or still about $4 above my break-even price, my strike price, which is down here. And then it rallies up into the close, and it ends up about, 266. So again, feeling pretty good. 2 days down, 3 days left to go. Not even close still. I'm still, looking at about a $8 difference, give or take. Actually, more like almost $10 at the end of day two, which is fantastic. Now, as we move on to day three, what happens here is that, so, and I have a little note there as well. On day 3, so last week I made a video about Jerome Powell speaking with the Fed on Wednesday, and they started on Tuesday. They finished it up on Wednesday this week. And again, their focus was the interest rates. What's going to happen to interest rates? Are they going to increase them? Are they going to pause them? So Wednesday was a big day and a very volatile day in the market here. So as you will see right here, and I'll explain what kind of happens here, market rallies up. The Fed meeting started around 2 o'clock, which is right about here. So market rallies up, getting close to 2 o'clock. And if I sold my position here, if I had closed out that contract and just taken whatever I could have taken $177 out of my $213 total. So I'm leaving about $37 or $36 on the table, which is a big deal. But again, I was feeling pretty good. We were hitting this high of 273. So I'm like, I'm $16 up almost compared to my strike price down here. So I was like, you know what, I can let it ride the rest of the week. So the market starts to price in, what's happening, with the news, with Jay Powell, what's happening. Jay Powell says at first, we're not going to increase interest rates. Right. There's a pause on them for a little while. It was already priced in the market. And that starts this very nice little, increase, being like, oh my God, look, we're going to have a nice little slowdown of the economy. It's going to be slow down, but it's going to be a soft landing, not a hard landing. But then Jerome Powell starts to have a hawkish sentiment. Now, basically, what hawkish means is that he's going to be starting to really crack down on certain things. They have what's called a dove perspective, and they have a hawk perspective. Dove is like peace, very nice, very relaxing, trying to ease up the market, ease the tension up. Hawk is like they're coming down quick, they're coming down fast, they're coming in hard, and they're really trying to make sure they can, be aggressive about what they're doing with the interest rates moving forward here. So this was a really nice little increase you saw from him saying no interest rates are going to hike, and then he started getting very hawkish towards the end. What he started talking about here was that there's going to be probably an interest rate hike in November, which is the next meeting. And on top of that, there's probably going to be a delay until the next interest rate cut. Since there's going to be another raise in November, the cuts are getting delayed probably for a little bit longer because inflation is still not under control. And boy, did that market read that. I just read right into it, and then boom, sold the whole thing off. So from about 2:30 to about 4 o'clock, it went from 273 almost all the way down to 262. So again, about $11 sell-off happened on Tesla stock in the last hour and a half, which is just insane. So I saw that happen. I started to get a little bit nervous, but I was like, look, it's still at 263. I'm still looking at $6 above my strike price, which is great. Again, this red line is where I want it to be above. So I'm still feeling pretty good. Again, it might be a little bit of, I saw a little bit of support here because it bounced down to close here. It bounced down over here earlier on. So I was like, oh, great, no big deal. Pre-market or post-market, pre-market, people start to read more into Jerome Powell. And there's more and more analysts coming out thinking about what's going to happen here. And when you give the market time to digest information that comes out from the federal government, that's when you start to see these big moves happening. So not a lot happening here. Pre-market, people start reading into things. More data comes out about possible inflation. I know that we have the jobless claims comes out on Thursdays. This is Thursday morning before pre-market. And then I start to get very, very nervous. Here's day 4. Here's Thursday. And again, now I'm starting to hover around this line here. It starts to rise up. I'm like, oh, great. I'm doing great. It breaks back down, bounces up. And then that 257.5 is just like right around where the stock is trading now on Thursday. So again, if this stock price closes below 257.5, anywhere below this line here on Friday when it closes, I will be acquiring 100 shares of Tesla stock. So I'm sitting there like, you know what? Okay, it's about where it is. Even if it closes right around 257, even if it's a little bit below, I still break even. I keep my $213 of premium, and I can just hold 100 shares of Tesla stock, which is great. Friday comes along, and this is where all the news really starts to hit. So I'm seeing the market, pre-market. I'm watching it as I'm going into work. I'm saying, okay, great. It's above the market price still. Looks like it might be a green day for the markets. And it was a pretty green day, I believe, overall for SPY and for QQQ and all that. But unfortunately, for Tesla, it was not. Big sell-off, tried to rally, and around 12 o'clock, Barclays downgrades Tesla. Now, when investors, when analysts, when banks downgrade stock prices and saying, like, I'm going to predict it to be 260, I believe previously it was 270 if I'm not mistaken. So Barclays downgraded their price thinking, okay, I can see Tesla trading at 270. Okay, now I can see it trading at 260. That means they're seeing a little bit of maybe a slowdown and they're not seeing as much growth as potentially that is there. And when analysts and banks are coming out with this information and they downgrade stocks, the market starts to downgrade as well. And they start to get a little bit more fear in the market here. Again, just like the opposite, if Barclays upgrades Tesla stock from like 270 to 280, people buy up more to try to get more of those gains, right? So right about 12 o'clock, I think it was around here, I think it was on lunch at the time, this announcement came out, and then Tesla just sold off because this was a huge, news thing and incorporated in. Barclays talked about their supply issues and how much they're selling and shipments and everything like that, and then the market read it as, oh my God, a little bit of fear. They sold it all off. And then it closed on the day at about 244. Now, so here's the risk that happens with selling put options here. And again, it's risk that you have to be willing to take here. The risk is that since Tesla closed at 244, that doesn't mean I get my 100 shares at 244. Again, my contract promised to buy at 257. So what that means is that even though it was down at 244, I still bought at 257. Which means that as a result, as soon as the market closed, I was already down $13 per share, and times that by 100 shares, I was down almost $1,300 just because of that contract here. So that's the risk you take, is that basically I already closed the market out and I was down $1,300 before I even fully was given the shares because I had to buy them at this price up here. So, that kind of thing is the risk you take associated with it. Now, let's break down essentially what I'm looking for, okay? So, my current position. So, right now in my account, in my brokerage account, I have 100 shares of Tesla at $257.50 a share. You multiply 100 times that share price, you get $25,750. Now, again, I had that cash sitting in my account already, so I had no problem buying the 100 shares. I didn't have to go into like debt or take a loan out or anything like that, so which is great. So I had those shares acquired. So I've paid $25,750 for these shares. Now, as the market closed, it closed at the share price closed at $244.88. That's again before the post-market activity happens. So technically, the current value right now is $24,488. Now, the only nice thing about it is that with the premium I still collected, instead of being down almost $1,300, only down $1,000. So the premium kind of offsets those losses a little bit. So again, you're obviously you're down $1,000. Yeah, I know I'm down $1,000. It happens, right? Over the last month or so, but I'm doing these trades, I've made about $1,000. So I'd say I'm pretty close to basically maybe break even, give or take, because I've made about $1,000 in premiums up to this point. So right now, I'm down about $1,000 with the premium I collected here. Now, where do we go from here? So what I'm looking at doing now is I'm looking at the new week here. So this is the new week that hasn't even happened yet. And what I'm going to do now is that now that I have 100 shares of Tesla stock here, I'm going to sell a call option. Again, option contracts, you can only buy or sell when you look at 100 share increments. Since I have 100 shares of Tesla now, I can now sell a call option to a buyer instead. And now what I'm going to do is that I'm going to sell a call option at that same strike price, which again is what I bought them at anyways. So what it does is it allows me to get more premium here. I'm looking at about 2 weeks out now, again, because I want more premium, so I want to get a little bit of value out here. So what's going to happen now is that if Tesla stock goes up to here, I basically break even on my position, but I keep the premium from the current contract and the previous one, so I'd still be up about almost $800 in a span of a couple weeks, which again is about over $200 a week, which is fantastic. So there's three different, options that, or three different possibilities that will actually happen here. First one is, let me see if I can get a nice little arrow here to kind of give you a little bit more of an indicator as to what can happen here. I'm still trying to get used to this a little bit. So, I think it's let's do the roller one. It's fine. So, say Tesla stock goes up to here. So it goes back up and it goes up to the 257.5 mark. First thing that's good about it, this loss will go away because again, I'm back to break even, and I'll keep the $213 and the $578 that I got from this Tesla trade of owning the shares and then being assigned the shares as well. So I get about, again, $800, which is great. The second option is that say Tesla stock starts to go down, say it comes down a little bit more, then that $578 that I get, again, will come a lot faster into my account because the probability of it going back up is going to be very, very tough. But it offsets my losses even more. So say it goes down, $3 a share, I'm getting basically about $500 back in there. So I'm down $300, I collected $500, so I'm still technically have offset my loss a little bit. So now with me selling these contracts here, I'm going to be basically trying to offset my losses. I'm going to try to get more premiums to kind of bring down that current loss. So that way I have, more money in my account still. So if it does potentially rally up to here, I'm break even plus all the premiums that I collect throughout the next 2 weeks, next month, next 3 months, whatever it is. Okay. So the idea behind what I have with Tesla stock here, let me just give you kind of like the quick, let me get rid of all this because I don't really need all these anymore. Can I get rid of all of that? Oh my God, these advertisements are so annoying. Let me get rid of all this, remove all those. Okay. So here's what my goal is for Tesla, right? So again, Tesla long-term, I'm going to hopefully hold, and then I'm going to hopefully get some gains as a result of it. Tesla stock, I'm okay with owning. I know it's a little bit more of a riskier investment compared to like Google or Amazon, but I think Tesla stock's going to do well in the long term still. Even if Tesla stock rallies, even like way out into next year and it goes up to $300 a share, I'm still making money on those 100 shares and I'm cutting premiums along the way here. So am I really nervous about Tesla stock? Not really. I mean, right now for me, even if it comes down to like a support level of like down here, which it looks like it could possibly do so, which is like way down here. That's $157. I don't think it's gonna get that far, but even if it comes down to $200 a share down here, yeah, I'm down $57 per share, so I'm down about $5,000. But again, if I sell more and more contracts, I can offset those losses, and I still see nothing but good upside potential return for Tesla 5 years, 10 years down the road. So I'm not concerned about holding Tesla stock for a long term now. So now the game is to be patient, to wait it out, and to see what Tesla stock does in the future and to play my cards right, hopefully, and kind of again offset those losses. So that is it for today's video. I have 100 shares of Tesla stock, so about 85% of my portfolio right now is Tesla stock, which is crazy to believe. Am I excited? Yes. Am I not excited? I'm a little nervous, a little bit, but again, we'll have to see how the market favors on Monday. What I might possibly do Monday, if this market, let me go back into like the I don't know, let me show you like the candles here. So if the market starts to rally up to like even get the closest on Monday morning, I might try to wait it out, and if it gets like up to like 250, whatever it is, I might try to still sell a contract at about 257 and try to collect like a big premium grab for it, and that way I get maximum money for it. So I'm gonna be watching the charts on Monday morning to see what Tesla does in the morning, and then kind of play it out from there. I'll be posting what I do on Instagram as well, so you can take a look at that. Thank you so much for tuning in today's video. Again, I own 100 shares of Tesla stock, which is crazy. Didn't think I'd be this far in my life, but you know what? I'm okay with it. It's a long-term play. I'm excited to see the results for things. Again, if you've made it this far in the video, make sure that you subscribe to the channel. Make sure you drop a thumbs up. And if you have any questions, please make sure to leave them down in the comment section down below. I'm going to try to hopefully have another video coming out soon. We have tomorrow off for a holiday, so I should hopefully see another video for going on the channel then. Thank you so much for your support. Make sure, again, to subscribe to the channel. I hope you guys all have a great rest of your day. Enjoy the weekend, and I will see you in the next video.